In a great show today for entrepreneurs and accelerators, we bring in Fletcher Richman. We discuss 2 iterations of his company before his acquisition of Halp.com, how the decision-making process worked, how the negotiation process worked, and how that affected his relationships with the businesses who are his consumers and also with his investors. First, serious about online trading? Secure your funds, keep your merchandise safe, and use a company that keeps the buyer and seller protected the whole way through. That's escrow.com. Payments you can trust.
FD was built by domain investors to increase your inquiries, sales, and profit. Forget spreadsheets and archived emails. Manage your entire investment portfolio in one place using a secure and completely confidential platform. Learn more at ft.com. That's EFTY, ft.com.
Hey, Sherpa Network. I'm Tess Diaz, executive producer of DomainSherpa.com, and today we have Fletcher Richman joining us from the Silicon Flatirons in Boulder, Colorado, to discuss his recent upgrade from BubbleIQ.com to Halp.com. Hey, Fletcher, how you doing?
I'm good, Tess. Happy to be on here.
Yeah, super cool.
Yeah.
So you've had a couple startups, but this is your first one that's venture-backed. Congrats.
Yeah, thank you.
Tell us just for a minute, because I like the name BubbleIQ, and that's interesting because sometimes we see people who rebrand from like blah, 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 blah to Halp.com. But I particularly wanted you on the show because BubbleIQ isn't awful. So first, what do you do? And really dumb it down.
Yeah, sure. So I'll talk a little bit about sort of at the high level, the difference between BubbleIQ and our new brand Halp, because one of the reasons we didn't hate BubbleIQ, it was fine. One of the reasons for the new brand was just because we were sort of evolving our product. So we knew our old brand as this more of an integration product. So BubbleIQ, when we launched, actually the very first domain we had for the company was Bubble CRM, because we initially were more trying to play in the CRM space.
Okay, .com?
Yeah, it was bubblecrm.com. And we had that domain for a little while. And then we did a lot of customer validation and got customer feedback and found that customers were actually more interested in ticketing than they were in CRM. So CRM is more like sales and marketing and that whole side of the house. Ticketing is more of your customer support, your help desk, like that sort of interaction where it's more about, I have a problem, can somebody fix it? And so we switched from Bubble CRM, and we already had sort of the idea of Bubble, and the idea was that a bubble was a ticket. So our product interacts a lot more in like messaging tools like Slack, which is kind of like an iMessage type of a tool. And so we were like, well, a ticket used to exist in email. Now it exists in these messaging tools. And so we started calling them bubbles instead of tickets, because it's just kind of a fun way to think about them. They're kind of bubbling around, moving between different channels and the messaging tools. And so we called them bubbles. And so as we shifted into this ticketing concept, we're like, okay, we like this idea of bubble, and we're like, should it be bubble up or bubble? What should it be? And BubbleIQ.com was available for the like standard $12 a year. And so we just kind of liked it. It was like, oh, BubbleIQ, it kind of adds this, like, it's a smart ticket that's moving around in the right ways. We didn't have any like AI or anything that we were doing, but the BubbleIQ product was just purely an integration product.
And when did you found Bubble CRM?
Yeah, we started the company in early 2017.
Okay. And then you shifted to BubbleIQ around when?
It was pretty quick. It was probably like July of that year or August. I forget the exact date. But yeah, it was really fast iteration, learned really quickly that CRM was not the way to go. Ticketing was the path. So we launched that, I think like we'll call it July of 2017.
Okay. And how big was your team at that point?
2. It was just my.
And so when you described this process of renaming, was it just the 2 of you?
Oh yeah, it was like, Bubble CRM, not a thing anymore. We just bought the new domain and then
Okay. Yeah. Yeah. And that's okay. What were your revenues at that point?
nothing. Yeah, we had no revenue.
Okay. Yeah. So when you have no revenue, the $12 domain isn't the end of the world. And your real investments then, where were you bootstrapping it? Where were you getting the money to go along?
My co-founder and I were contracting a little bit. So we basically would do like 10 hours a week of contract work. And it's just so cheap to start a company now, right? We paid for a G Suite, 2 email addresses, it was $10 a month. And we paid for Heroku, it was another $10 a month. So our cost was $20 a month. That was the whole cost of running the business for the first 6 months.
Boom. Yeah. And I'm guessing a lot of your time.
Yeah, tons of time, obviously.
Yeah. Yeah. So then you're serving, basically you're serving, it sounds like, larger businesses who need help with processes. That's, Slack is like a process tool. Correct me if I'm okay. And you do something.
Yeah. So we were helping them with their ticketing processes inside their company. So Adobe was one of our early customers. Every time there was a problem with an internal system in Adobe, they would go into their Slack tool and use our system to open up a ticket that says like, hey, there's a problem. And then that would open up a ticket in their ticketing system on their back end and say like, there's a problem, and we just manage the whole back and forth.
So it facilitates, I would say, using a ticketing system. It's, it helps to prioritize tickets to, you're looking at response times, or maybe, is there anything that's measuring like the tone of how escalated a client is, or things like that too?
Yeah, it's just facilitating the whole conversation. And so you're right. You can measure response times, resolution times, customer satisfaction at the end, so they can give it like a little thumbs up, thumbs down.
Gotcha.
So it makes that whole interaction super easy.
Okay. All right. And I mean, that is a vital tool to most companies today. All right. Very interesting. And I see, I mean, you can just book a demo on halp.com and kind of figure it out from there, I think. So at what point, so July 2017 was not that long ago, and you upgraded to BubbleIQ. And then when did things start to change for you?
Yeah, so we got our first customer in the fall of 2017 and just started growing our customer base. We kind of found this product that was sticking and had some product market fit. And we started getting customers and growing the revenue of the company. And we added a third team member. And at that point, got some initial investor interest in the company. We went through an accelerator program here in Boulder called Techstars in 2018 with the 3 of us. And then raised a sort of some small angel financing after that, and continued to grow the customer base. And we'd kind of stuck ourselves in this really specific niche. The only way you could use our product is if you're using a really specific ticketing system and using Slack. So we were like the glue that sat between these two systems. And it was kind of niche by design. We wanted to be super specific so that we appealed to that one really specific audience really, really well. But it made it so it was hard to build a really big company because we were just focused on that one really specific audience.
Mm-hmm. And were you aware of that from the start? Or when?
Yeah, it was our strategy. Like I think in today's world where there's so many different tools, there's 1,000 different tools you can use for everything. There's tons of CRMs, tons of ticketing systems, tons of productivity tools. You have to solve a really specific problem and a really specific thing that appeals to a certain audience. Otherwise, you just get lost in the noise. And so we chose to go like super deep on, if you use this tool and Slack, then you have to use our product. It was Zendesk and Slack were the 2 tools. If you use those 2 things, like you're an idiot if you're not using our integration. But for everybody else in the world, they didn't really care. So it was by design. But as we started to like get more and more customers and bring on these investors, the idea was, okay, let's take these customers we have. Let's go talk to Adobe now. Let's go talk to Strava and all of our really cool customers we brought on board and figure out what other problems we can solve for them and what the sort of like bigger opportunity is. And that's what led us towards and down the path of eventually deciding we needed a new brand and a new product and all of that stuff.
Interesting. Okay. And that's a great strategy as an entrepreneur. And did that fit into did you seek out this, the investments, or did that more just kind of, you mentioned that there's a very close-knit community in Boulder. What are you? You're on two streets, Pearl and what?
Pearl and Walnut. Yep. Those are
Pearl and Walnut. And you got Google on the one end, and what's on the other end?
The Techstars Accelerator Foundry Group with just a famous investor, and then all in between. There's Twitter has an office, GitHub has an office, Amazon's right around the corner from where I'm sitting right now. So yeah, super dense technology community here.
That's kind of neat to be so dense like that.
Yeah.
So did you mean to be looking for investment? Did it just kind of happen? Did you feel like in order to launch this second product, basically, that you needed investment?
Yeah, that's a good question. So when we first started the company, I had previously worked for a couple of years for a VC, a firm called Galvanize Ventures. And so I had a really strong investor network. And when we started, we initially were thinking, we don't need any investors. We're just going to bootstrap this thing the whole way, and investors suck, screw them, was kind of our that was my feeling after working in the industry for a little while, to be honest with you. But once we got a little ways into it and we started getting customers and people were seeing our traction, I like to keep folks up to date. We do sort of a private monthly update for our investors. So we've done one since the day one of the company. It's pretty cool actually to be able to go back and look at it.
Huh.
It's like, hey, here's how many new customers we got. Here's what we learned. Here's what we're going to do next month. And then you just do it again. You start adding asks at the top too. So like, hey, we're hiring this person. Can you help? Or, hey, could you promote our new product that we just launched or whatever? And so we started that day one of the company, and I added some of the smart investors that I knew to that list because they see lots of businesses and I figured they can help and give advice. And like, whether or not I'm looking for money, kind of the best way to raise money is to not be looking for money. And so anyways, I just thought it'd be useful to have them on there. And so I kept them updated. And then actually like the folks at Techstars kind of came to us and were like, hey, we're really interested in what you're doing. Would love if you'd apply to the program. And then kind of similarly, the time when we raised angel money, it was very much a conversation of like, I don't think we want to raise. I don't think we want to raise. And then, oh, well, what if we did want to fundraise? And kind of playing hard to get, I think, a little bit as the entrepreneur, which tends to work really well because when investors they're seeing all these companies come to them, ask them for money. And then there's this one company that's like, oh, we don't need you. And that playing hard to get, I think, makes them want it a little bit more. So we played that strategy a little bit, but the initial thought was we wouldn't need to raise money for the business. It'd be a really great business we could grow through revenue and through customers. But as we sort of started to see the larger opportunity, we realized that that there was this huge opportunity there and that the market was moving really fast and that having more money and more resources would be really valuable. We also just got together as a founding team and we decided that the thing we wanted to optimize for was learn really fast and have a really fun adventure. It wasn't that we wanted to optimize to make as much money as possible. I actually think if you're just trying to make money as an entrepreneur, that you shouldn't raise VC money because it's a lot easier to not raise capital, build a business, and sell it for $5 million and walk home with all that money in your pocket versus going out and raising capital. The expectations for how much you're going to sell the business for go up a lot. The preference, there's a bunch of money now above the stack that they get their money back before you do once you take investors on. So we're not optimizing to make money. Actually, we're optimizing to build a really big company, learn a lot, and have a really big adventure. And we felt that raising money was the best way to do that. So that's how we ended up kind of down the path of talking to investors and raising capital and doing your sort of more typical venture back route.
Fletcher, that is super cool and really talk about outside the box thinking. I was telling you a few minutes ago that I just interviewed Matt Berry, who's like one of the top influencers on LinkedIn. And he is just a titan in the entrepreneurship world. And I've never met anyone who started in VC and then went into their own serial entrepreneurship. And he did, and you did. So you're in a good team. And he said the same thing. But what's really neat is that you and your co-founder, agree. Is he co-founder?
Yeah, I have 2 co-founders. Yeah.
Okay. It's really neat that you guys agree and that you know what your priorities are. And you are so young that someday, if you feel like you need to absolutely maximize all the money, you'll have that option too in another venture that you do. So really, really different. And I do want to warn our Sherpa network here who's listening, this is not going to work for everybody. This is your core values were different. And I think the density, it's like you were getting on elevators with these people all the time and you were the only one saying, no, I don't want to do an elevator pitch.
Right.
And that stood out, but it's not for everybody. Like if you're in Silicon Valley and like you can't eat dinner tomorrow, pitch. That's different. Yeah, that's cool. So tell me about how you started being interested in changing a domain in general after. So July 2017, you've got BubbleIQ.
Yep. And
then what?
Yep. And then we went through Techstars, raised a little bit of angel money.
And when was that?
That was June of 2018.
Oh, that's right. Okay. So about a year later.
Yeah. Techstars was like February through May. Finished Techstars. You do this big pitch in front of all these people and then closed our first little round of financing in June.
Okay.
We went to all our customers and we're like, hey, right now you use us as this integration. We integrate between your communication tool and your ticketing system, Slack and Zendesk. And this workflow is really great. It's working awesome for you. But what else can we do? Like, what are the bigger problems that we can solve for you as a company? And as we talk to those customers, they're like, oh, well, we have all these problems with our internal IT process and our internal request process. So you're kind of helping us with a little bit of the communication, but we have all these broken computers and password resets and all this stuff, and it's all happening in Slack, and we're not tracking a lot of it. And so that's when we kind of realized, we could actually build a ticketing system. So for some of our customers, they didn't even have a ticketing system at all. And they wanted us to be the ticketing system. And for others, they had sort of like multiple different ticketing systems and they wanted us to bring them all together. And so
which makes sense. Okay.
Yeah. And so we realized, wow, there's an opportunity here to actually build, and sorry, I think my Slack was going off. And there's an opportunity here to actually build our own ticketing product, which is a much bigger opportunity. So like, Zendesk, which is one of the players in that space, is a $10 billion company. ServiceNow is another big ticketing system, is a $50 billion company. I mean, these are huge, huge businesses that get created around these ticketing systems. And so we started going, okay, we're going to just experiment around it. We weren't totally sure that we were going to do it yet. So we're going to build a ticketing system. And we were trying to figure out, okay, BubbleIQ, it's fine. Like you said, reasonably good brand, but people all know it as this integration. Like we really need to show everyone that we're doing something new and something different, and that it's a new brand, a new product, and not quite a new company, but almost, right? Because we really wanted people to think of us very differently. And so as we're brainstorming around ideas, we're like, okay, we could do I don't know, we were just kind of joking around with random ideas. And one of the ideas that came up was Halp Desk. And it was my co-founder, Tristan. He was like, yeah, Halp Desk, helpdesk.com is available. And so he just went that night and bought helpdesk.com. And we all thought it was a joke, to be honest with you. At the beginning, we're like, no, that's stupid. Help Desk, that's so dumb. Who would?
And this is still now the 3 co-founders in the room? Or are anyone from the accelerator or anyone joining in this conversation?
We hired a salesperson and another engineer. So there's 5 of us full time at this point. And we're just brainstorming, and we honestly laughed at the name Help Desk for quite a while. And we're like, that's so dumb. And then I think Tristan kind of knew, he planted the seed, and then it slowly grew on everyone. And we're like, wait, Help Desk, that's actually kind of cool. It's kind of funny, but it's also different and it stands out. Every other company in the space is they all have very similar names. And after a while too, we started talking to some customers about it and they really liked it. And then we started talking to some of our advisors and they're like, one of our advisors was like, Halp desk is fine. Just cut the desk. Like just Halp. Kind of a Facebook style moment where he's like, he's like, cut the desk. Just Halp.
Cut the desk. I like it. And GoDaddy started out with their GoDaddy was a joke too. It was like a placeholder. Yeah. And then they just got all this feedback and everybody remembered it and was like, oh, that's funny. That's cute. That's memorable.
Yeah, exactly. And so we actually then went out and got Halp.ai. And just so that we had Halp as the brand, and that's what we set up.
And was that like a new registration as well? Nobody else owned it?
Yeah, .ai's are a little more. They're like $150, I think.
Yeah, but I'm surprised. Okay.
But yeah, that was brand new, pretty short domain. Actually, Halp.io was available, and then I like stalled on it for like 3 days. It was a brand new registration available, and some dude in London registered it that weekend. And I was like, no way. Are you joking me? Because Halp.io, and I think if we'd gotten that, we may have never even pursued the .com. Like Halp.io, I think is like reasonably okay. I don't know. Maybe we would have.
Interesting.
But yeah, we got Halp.ai, and we're like, that's fine. We hadn't really figured out what the sort of AI machine learning part of our business was yet. We kind of have a little bit more now. And then we're like, okay, we got Halp.ai. We set up the landing page. We got the initial product out, all just on that, kind of still experimental, still just like getting feedback from our customers and figuring out if the product made sense, if it worked, if people liked it. Because we really starting in sort of October of 17, we rebuilt from the ground up a ticketing system. Like we took all our learning, started a brand new code base, and we're like, let's build a ticketing system that lives, that's better than the ones that currently exist based on everything we've learned.
Okay, I am so confused. So these people gave you $2.7 million.
Yep.
And you had like one super brief conversation about changing your entire brand, and they were like, cut the desk? That's all you got?
No, we haven't. So we haven't raised the $2.6 million yet. So we've just raised like a little less than $500,000 so far in like angel money. And yeah.
From a couple people?
A bunch, yeah. It's like
so one guy who's probably like 50 grand in,
right,
is like, cut the desk.
Right. He was
like, okay, but you don't have like an advisory board or anyone giving you better.
It's pretty much us at this point. Yeah. Like we've got folks who are helping, but they know that we're running the company. They're not super heavily invested.
Yeah. And nobody's like a branding expert or
not really, no.
A search engine.
This one guy who said to cut the desk, he was a co-founder of DigitalOcean. And was like, really early there. So he's really good at branding and they built a great brand there. So he was like, cut the desk, but that's our sort of marketing branding expert basically.
Okay. All right. Okay. So that clears it up for me. Sorry to interrupt.
So yeah, now we've got like this brand Halp. So you look at all the sort of other players in the space, literally Zendesk, ServiceNow, Service Cloud, Freshdesk, Freshservice. Like it either has the word service or desk in it.
I literally cannot say a single one of those back to you except Zendesk. And then I could make it up like
desk now.
Fresh, what?
Yeah. Like you could make it. We've talked about making a matrix of like service and like desk and now, and like you could basically make all the different companies in the space with that matrix. It's
now desk service.
Yeah.
Exactly. Yeah.
And so now we had this like fun brand, which is Halp, which is just totally different, really just interesting. The more and more we got it, people are loving it. Like they're replying to our tweets like, oh my God, this brand is amazing. It's super funny. It's kind of like a cat meme. There's a little bit of meme lore around it. Basically like cats getting stuck in things. If you Google Halp memes, you'll see like a bunch of cats just like stuck in something with its head poking out. It's like, help.
So it's like saying help the cat, and for some reason cats say it that way.
Yeah, exactly. So there's a little bit of meme lore around it, and it's IT people who are our audience love that stuff, right? I mean, they're all geeks. They all love just like funny, quirky little jokes. And so it was starting to really super strongly with folks. The product was doing well. Initial customers were loving it. And so at this point, I kind of thought we'd go out to start fundraising in sort of like mid 2019, but this is like February of 2019. We got approached by a couple investors that we were just having informal meetings with, and they were like, "We love the new product. Sounds really great. Like we want to invest in the company, basically."
Okay.
Our full seed round started coming together.
Okay.
Basically, right in the middle of that round, the person who ended up becoming our lead investor, I remember he voxed me and he was like, "Hey, like it looks like Halp.com might be available. We should try and get it," because it was like redirecting to some random thing. And so I was like, "Okay, like our lead investor is excited about this." We had all kind of talked about it, like, "Oh, Halp.com's maybe available." We had no clue how much it would cost, what the process would be, or anything. But he was like, "Let's try and get it," basically. So our lead investor, he was excited about it. He was like, let's make a move on it. And so we're like, okay, cool. We hadn't closed any of the money yet. So there was no announcement, like kind of publicly, if you looked up Halp, you didn't really find anything, right? And so we kind of felt like we had a little bit of leverage in the
You
sense.
found the cat memes.
Right, exactly. Like we had a little bit of leverage.
Had you already gotten the Twitter handle at that point?
No, we hadn't gotten the Twitter handle. Really had nothing. We still we're publicly facing BubbleIQ. We had this one little Halp.ai landing page, but like you had to really search for it to find it. It was pretty hard to find.
Yeah.
Only customers knew about it. And so we were kind of an unknown entity in terms of Halp, if you look that up. And so we're like, okay, let's like reach out. Let's set up a random Gmail account and just reach out to the person who's
stealth.
Yeah, exactly. Just go stealth and talk to them and see what we can see.
Okay. So now, I mean, this is where like you have office space, right?
Not at this point. We were in a co-working space.
Oh, okay. Sorry. That makes sense too. But like when you're ready to get your office space, are you going to do that on your own? Yeah.
And we were doing these two things at the same time, actually. We were talking to brokers about getting an office space, and then we were talking to domain brokers about buying a domain.
So you set up the anonymous email address to reach out to domain brokers, not to reach out directly to the owner?
The person that we reached out to ended up, like, they had a sort of third party that they were working with. So yeah.
So you reached out to the domain owner and they were already brokering the domain?
I don't know if it was a broker, maybe that's not the right word, but they had like a entity person that we were talking to, so we weren't talking directly to the owner.
Okay. All right. But it's interesting to me the chronology of events. So you've already pretty much invested in the domain, and if you can't get the .com, you're just going to wing it on the .ai.
Right.
And then, I'm assuming as you're looking for your physical space, were you using a real estate broker?
We were, yeah.
But for your digital space, which was probably more important to your business, you weren't. And that's surprising to me. It's not an uncommon situation, but it's still surprising.
Yeah, I think it's less known, right? Like when I think of like a domain broker, I don't even think of it, to be honest with you, right? I'm just like, I don't know how to buy a domain. I'll just email a person and see what happens, right?
Yeah. And there's nothing wrong with that. It's just, I think that, 10, 15 years from now, that mentality will change. And I think that I would like on DomainSherpa, because we bring in so many entrepreneurs here to discuss just that little piece of how their domain contributed to their entrepreneurial success. Like I was telling you earlier, when we had the ring.com founder on, and you and I couldn't even remember what those competitors were so big, and I could have said all their names, like, I don't know, in 2000 something. Right. But now it's like, who else was there besides Ring? Nobody knows, nobody cares. Ring is it. And it's because he saw that additional standout component of the domain name. So I would love for DomainSherpa, my company, to produce a guide. It says, oh, you're a startup that an angel investors can have. In fact, DomainSherpa was originally founded by an angel investor who kept advising his advisees on domain names. And I think it's just such a backwards process that people go through now. Okay, so so now you're interested in Halp. You set up an anonymous email. You reach out probably to the owner of Halp, who I'm thinking is the third party. Was that Chris Zeiker?
No, it was. It's like we figured out pretty quickly that the guy who owned Halp was like somewhat of a like known trademark troll, like trademark domain troll guy. not the ideal person you want to buy from. I think his name's like Michael Glessner or something like that. And he's like, no, we found a bunch of articles that were like, this guy's like spent millions of dollars, like just trying to screw people out of trademarks and domains and like all this stuff. We're like, great, this is a super good start. And so we emailed, and it was some like Singapore firm that like emailed us back that was like, hey, like I represent the owner and like we're only accepting really serious offers, so like let us know if you're like how much you're willing to spend on this. So we went to GoDaddy and we like looked up, we're like, what's the GoDaddy value of this domain? And GoDaddy said like $9,000 or something. We're like, okay, that seems kind of low, but whatever. And so we replied, we were like, we would be willing to like give you $12,000 for this domain.
Okay.
And they're like, so they're like, oh, we'll go a little above and we sent them the GoDaddy link with like, here's what GoDaddy estimates the domain is worth and blah, blah, blah. And then I think there was like a short delay, and then they're like, okay, the owner says he'd be willing to do it for $45,000. We're like, okay, cool. And we like tried.
And did you see that coming at all? Like
no idea what to expect, to be honest.
like, it's interesting to me. I don't know who owned the domain before, but it's interesting that your perception is basically, without saying it, you're like a squatter mentality. And I don't know if that's accurate or not, but it's your perception, and that's really important. Yep. And then, GoDaddy, which for a 4letter.com like that, I mean, there's no way it's worth, the fair market value is not $9,000. Yeah. But you went to, a very trusted entity and looked that up. And then you approached very generously with 12,000. I mean, percentage wise, that is super generous. Yeah. And when they came back with 44, 45, were you like, what?
I don't think that we thought that was outrageous. No, like, I think we just didn't know where to start. And so we wanted to give a reasonable but low, like we thought 12 was low actually. We saw that GoDaddy thing and we're like, oh, 9,000, like that seems super low for a 4letter.com.
Okay, all right.
We're going to start with a really lowball offer and a like reputable source to back it up, right? So that was our, I would say, rough strategy was like, let's start with something that's like clearly low, but also clearly like this is a serious person, because we didn't want to say like we'll give you $1,000. At that point, they're going to be like, who are these people? They clearly are just fucking with us, and there's like screw off, right?
Okay.
So enough of an offer that it felt like they're serious, they're interested, but not go out and be like, we'll give you 50 grand. And then they come back and are like, it's actually 100 grand. Right. And like, we wanted to make sure we kind of anchored low a little bit. So when they came back with 45, we were like, oh, actually like, and we talked to a few people. I know a guy who got another 4-letter domain, and he was like, yeah, that's like around the price we paid. So I was like, oh, like that's actually
okay. And how did you find that person?
Through the Techstars network.
Okay. And did Techstars, like, where is the accelerator in this process advising you or helping you, saying, oh, you got this offer, let us help you with that? Because, I mean, you're kind of spending their money.
Right. I mean, they're not super involved. We did actually, the guy who we went through the accelerator with ended up being our lead investor. He has his own fund called Matchstick Ventures. And so like, I guess the accelerator was involved, but it was really because of him through his fund that was now going to be the lead investor in this new round that we were putting together. So they were somewhat involved, but I don't know. I think our investors trust us to make the right decision, and they try not to get too heavily involved in the process. So.
Okay. All right.
For us. And we're like, hey, I know this guy who bought a domain, talk to him. And this guy buys domains all the time. And like, we kind of built the network there of folks to have a little bit of expertise. So yeah, at 45 grand, we were like, okay, not too crazy. And then we like tried to counter a few times. We're like, what about 30? And they're like, nope, 45. And we're like, what about 35? And they're like, it's $45,000. And we were like, okay, sounds good.
I think $45,000 is a smoking deal.
It is. So we're not done with the story. So
Okay.
they said like, and I've talked with a few people about this now that like there's some other stuff we could have done, but like we got a written email thing that said like, we agree to $45,000. And then they're like, all right, great. Send us your entity name and your bank account information, like, or not your bank account info, but like, we need like your entity information so we can set up a wire transfer or whatever. And I was like, we were like, huh, interesting. Like, we don't want to give them that because then they're going to know that we're like a venture-backed company, and like we don't want to do that. That sounds like a bad idea. So we reached out to our lawyers and we were like, hey, do you know any brokers? So this is actually the point that we like got into, like, we're trying to buy a domain. We need someone to just like facilitate the third-party part so that we give their account information and we don't have to give ours, was basically like our thought process. And so they introduced us to some guy on the East Coast. That guy, we then CC'd that guy in. We're like, hey, we're working with this guy. He's going to give you his information. And then, I don't know, like, there was a few kind of misfired emails. I don't know if they got like cold feet because we had introduced this third party person or what happened, but they just suddenly went quiet. And we were like, oh shit, like our round was about to close in like 2 weeks. And so we're like, once our round closes and we announce the company is Halp, now there's a public thing that says like Halp, $2.6 million. Like the price just goes from $45,000 to $400,000, like that, right? And so we're like, shit, we have 2 weeks to try and close this. And they started stalling out. And so we're like, oh, fuck, this is bad.
And I'll tell you, that is a strategy.
Right.
This is not this guy's first sale. And I looked him up. You know what? You are not just randomly giving all domain investors a bad name, like some people do on a misinformed level. But it does look like every search for the owner of or the seller of this domain calls him an infamous troll. And that, like, he's highly, highly, highly litigious. Yeah. That's a scary person to deal with. Yeah. And again, fascinating and worrisome to me that your legal team wasn't involved, your, potential or almost backers weren't involved, that they were just like, bye boys, good luck.
Yeah, I mean, I'm maybe being a little bit more, like, we were serious about this. So we were also talking to trademark lawyers this whole time and trying to figure out from a trademark perspective what would make sense and what wouldn't. And like, there's a lot of, there's like actually some ongoing stuff there with this guy. So I don't want to get too much into the details there because I don't know what I don't know about like where this will go, and I don't want to screw myself.
No, that's okay.
But yeah, like we were talking to our lawyers there. We then had our lawyers introduced to this broker. And then the broker, like, I don't know if he messed it up. I think they were just using a strategy, which was basically just like, we're going to wait. We know that they probably have like funding or something like coming along. And so
Oh, they do.
They strung us out. Right. And so we're like, okay. We then reached out again directly via our like whatever Gmail, like anonymous thing. And we were like, hey, like, I know this kind of fell through with this other guy. Like, we are still interested. And they're like, okay, cool. It's $75,000. And we're like, what? Like, you just said 45. What the hell changed? They're like, look, it's $75,000 now. Like, we can use like broker.com and we'll get the deal done. And it's like 6 days.
Escrow.com?
Escrow, yeah, sorry, escrow.com. So like, yeah, we can just use, and we're like, well, why couldn't we use escrow.com earlier? Like, what? Cause so they played us.
But they wouldn't have gotten all that out of it. Hello.
So we're like, all right, whatever. Like, cause we only had 6 days to go. We're like, okay, we got to like set up the escrow account, like verify it, get the wire done, all this stuff. And so we're like, fine, cool, $75,000.
And were you worried that if you're just like, yeah, fine, double it, no problem, let's just do this, that then it wouldn't close at double either?
Oh yeah, we were freaking out. We were like, maybe then now they'll try and raise to $120,000. Like, I don't know, now that we said yes, like, I don't know. And so, but we're like, well, we don't really have a choice at this point. That's coming down to the wire. Let's just try and get it done. And so we were like, okay, great. Here's we set up the escrow account. We did the wire all kind of like as quickly as we could. And then like it all went through, and I think it was 48 hours before we announced our round, the domain got transferred over. We set it up. We had the halp.com domain for the like public announcement and everything. And it all totally worked out.
Wow. This is a story of luck.
Yeah.
I mean, you guys picked a great domain. You had a lot of intelligence behind it, but on the domain end, that's phenomenal. This is an unusual story because most people end with, and we never got it. And
Right.
that's rough. I like how you laughed. You're like, I know, it's like a kid's candy store.
Well, I came to grips with the fact that like it was this roller coaster, right? I was like, everything was going right. We got this beautiful office we're in. It's like amazing. We got the perfect investors we wanted. Slack ended up investing in the company. Like everything that we had wanted was going right. You know what I mean? And it was just like, pinch myself. How is this? We were getting we were hiring the people we wanted to hire. Everything was going perfectly. And then we were like, okay, final thing. Like if we can get the .com, that would just be unbelievable. Right? Like, and it looked like we were going to get it. The whole thing we were at 45. We're like, for 45 grand, are you kidding? This is incredible. Like, what? This is amazing. And then they went quiet. And so we had this roller coaster of like, yes. Oh, damn. And then the last second, yeah, we got it. We went through a pretty nice emotional ride there.
yeah, I bet. And, for you, it sounds like more the icing on the cake than a necessity at this point.
Fine about it.
But you're looking at, a market with a multi-billion dollar, revenues per company. And at some point, you're right, whether it was Halp or something else, at some point, you're really going to need to upgrade that. So tell me, when you back a year before, when you were working with the accelerator and took in your first bit of capital, did you feel that your name of BubbleIQ affected those conversations in any way?
I think a little. I would say it was neutral in that situation, right? It wasn't bad and it wasn't great.
Okay.
And so it had a big impact. I have noticed that like, whether it's customers, investors, anyone, like they just take us more seriously now that we have a 4letter.com.
It's credibility.
It's credibility. Even like people that want to work for us are like, what? That's so cool. You have like F at halp.com or like Fletch at halp.com, like just cool email addresses. And like, I don't know, it's a perk almost. And it adds credibility. It's really cool, especially for geeky IT or engineering type people. I think it's like super cool. We've had this like big boost of combination of a 4-letter domain and being backed by Slack, all kind of wrapping together. We no longer get asked these, like customers used to ask, well, how long have you been around and how many people do you have? And like, are you going to be around next year? And now it's just like, oh yeah, you're backed by Slack. You have a 4-letter domain. Cool. Like, where do I sign for the contract?
That's hilarious. No one asks, how long have you been around? It does. It says, it just has this like a gravitas to it. And it's really important to see, Fletcher, how you pulled it in as part of a much larger ecosystem. It's not about, anybody can go buy a 4letter.com, probably not for $75,000. And they're not going to have what you have. You have, one very thoughtful product that then you carefully expanded further. You have a great ecosystem of this, dense entrepreneurship camaraderie. And you have, sounds like, a fabulous team. You're very in touch with your core values. And you have a phenomenal domain name. Like it's, what tier are you trying to reach and how fast are you trying to reach it? Is the difference. So what did you learn from the process? What would you do different when you're, 50 and you're an angel investor? How would you advise a startup differently than what your experience was?
Yeah, that's a good question. I didn't really know about the folks like you guys that like actually do this all day, every day. So, they had a written contract with us over email that said it was $45,000. So we could have held them to that. We could have probably saved at least like around 30 grand there. like, look, you have a written contract with us. I don't know the exact legal actions you take around something like that, but I think knowing the moves that they're going to pull and the way that they were going to do things beforehand, we would have approached the whole situation a little bit differently. Yeah, I mean, knowing how escrow works and like how easy that is, it's super simple. It works super well. They've set it up so there's no risk. So like when they had asked us for our bank information and all that, or like our corporate information, I'd be like, no, you don't need that. What are you talking about? We can use an escrow service. So I think, yeah, there was a bunch of different spots we could have just played it a lot better now knowing the game that they play, right?
Yeah. And not all domain sellers behave like that. But it's also interesting, you already knew you wanted help. And if you weren't going to get help.com, you weren't going to go get something else. Right. Other startups just say, we're looking for gravitas and credibility and to make a statement about our expansion. But our budget is $75,000. What can we find within that budget? And if your budget's $400,000, you can find something. If your budget's $75,000, you can find something else. And they're going to be, different. But I still think you got a smoke and deal on it, which is kind of surprising.
Yeah. I think because it's not really a word, it's only kind of a word, that helped a lot. But no, I agree. I think I've heard stories and like, I think overall we ended up doing pretty well. So I'm happy with it.
Yeah. I mean, in general, the domain name market has very, it's just like the real estate market. There are comparable sales. There are, but it takes not just an algorithm, especially at that level of value, to look up, what is truly comparable and why or why not to get to a pricing. But when you're dealing with a seller, like this guy went to court against Donald Trump. Like, I mean, so you were going to spend a lot more and he lost. But I mean, the fact that he's that litigious is worrisome for, you could either pay up your 30 grand or spend a lot more than that in legal fees with an uncertainty and a time delay. So good for you. That's super cool. So what does Halp? Oh wait, how'd you get your Twitter handle then?
We just, we found the trademark and then we were like, hey, Twitter, we have this trademark. And they're like, okay. And they gave us the handle.
Really? Did someone else already have it?
It was like, well, it was a dead account. So not
okay.
Really. Yeah.
All right. No, I thought it was like a cat account. Okay. So is a cat your company spirit animal?
Kind of. Here, I'll show you. We've got this cool mural that we made.
Oh, I thought you were going to be like showing me the. Oh, that's great! And you guys even made your own mural?
Oh yeah. Yeah.
You do it all, y'all. Nice.
Painter come in and do it. Yeah. Like I said, our office is pretty sweet.
Yeah, that's really cool.
Yeah.
Now, what does Halp have in mind for the future? What are your plans for the next year?
Yeah, so lots of growth. So we're 12 people in the office now.
Oh wow.
Yeah, growing the team, growing the customer base, just continuing to build out new product, new integrations, new functionality, keep hiring. So yeah, lots of growth ahead, and we're just kind of continuing to innovate around the product we now have. There's just a ton for us to build, a ton of opportunity to increase automation and increase sort of the workflows that we're providing to our customers. So yeah.
And do you do custom build outs or only for the big dogs?
It's SaaS. So, yeah, it's your typical SaaS. I mean, big enterprise clients will always have a customization or two that they want. The good news is you do one customization for Adobe, and that translates over to your other enterprise customer, and it works for them too. So yeah, it's all SaaS.
Very, very cool. Really, such an interesting story, Fletcher, and so much, I think, potential for Halp to really grow from here. This is going to be super interesting to watch you over time. I'd love to see you come back on the show in a year, 2 years, and tell us what, I mean, I wonder, and you don't have to speak to this, but I mean, of course, maybe you'll sell, maybe you'll exit in some other way, or maybe you will just, what is this going to do to now service, help, what,
Yeah.
and Zendesk, and just super, super cool. And I think that might be a brand tagline for you. Cut the desk. Little zinger at Zendesk, but also that's what you're doing, right? You're cutting people's time at their desks. You're making them more productive, making them not want to stab their desk. I don't know. You cut the desk, man. I like it.
No,
So thanks for coming on. I am going to continue working on some startup, like white papers, just some general pieces, but I would love to send them to you and see what you and your friends at Techstar think, because that's a key component that could make things a lot easier and a lot less deals go sideways.
Yeah, I'd love to check it out. So definitely send it my way.
Yeah. All right. Well, we'll see you next time.
Yeah.
Okay.
Thanks for having me.
Yeah. Bye, Fletcher.